live, coming to you live from northern Israel, and talking to you about Bitcoin and, well, mostly Bitcoin in this video. If you look at the 4-hour time frame of Bitcoin, you'll notice the asset is still in mean reversion to the upside target at around 100K, and it's going back and forth between, whatever it is, 99, 98 and change to up to like 103, 104, somewhere in that area. Back and forth, zigzagging. We'll see what the actual numbers print out to be on the 3012 RMLR between now and end of the week, Saturday, sometime around there. It could easily mean revert to that number, to that area by then, like specifically to the RMLR. And we know that it's a mean reversion because the last time it hit the third band to the downside of the 3012 RMLR on the 4-hour time frame was back on Saturday, Sunday, something like that. It hit a couple times, and then it stopped hitting it after that. So there is now a very high probability, as in more than 99.7%, that there is a mean reversion happening to that 3012 RMLR, meaning it will more than likely hit that RMLR before it hits that third band again. That's what that means. Now, is it guaranteed that it will hit that RMLR before it hits that band again? No, nothing is 100% in life, right? But it's more than 99.7% that it will. Right? It is extremely rare that it will actually hit that third band again before it hits that RMLR. Could it happen? Yes. So what does that mean? Well, if it does head south, right, then you would short and you would take profit before it hits that line, because it's not likely to hit it. And if it does, more than likely it will just snap through it and bounce back. And if it doesn't snap through and bounce back, if it actually just resets to a new target from going below, what will happen is however long it stays under that third band down, once it comes back from there, it will be even a higher probability after that point, like way more than 99.7. It'll be like 99.85% probability that it will hit that 3012 RMLR before touching that band again, right? After it stops hitting it for a couple of candles. But the point is, at this point where it is, it's already at a 99.7% probability that it will hit that RMLR before touching that third band to the downside. So how can you use that? Well, it means that, first of all, there's a pretty good chance it's going to go and hit that line, okay, in terms of targets and directions. It's not a signal. I'm telling you, hey, long now. No, I'm saying keep an eye on your trades and notice that more than likely it is going to get to that 100K area before it hits that third band to the downside. Now, it doesn't have to go to 100K. It's going to go to the RMLR. The RMLR can be anywhere when it hits it, okay? And yes, if it doesn't hit it until Saturday or Sunday or Monday of next week, and it can take a long time to hit it, right? Well, it's possible that the RMLR will start dripping, or will start drooping down, especially if the price action begins to droop down. So it could be that it will hit it where it's currently at or even lower, right? But it will hit that RMLR. So that's the moving target, right? So keep that in mind as you're scalping your way through the days. Where's the moving target at any given point on any time frame? Well, on the 4-hour, last I looked at it was probably 8 hours ago. So I can't tell you exactly what it is now, but it was up around 100K. And then it was going to dip a little and then bounce back up. So it's probably around 100K again. You can go see it if you have access to the RMLR, obviously. If you don't have access to the RMLR, well then, if you want access to it, you just come down for trading and get yourself the Pro Traders package, and you'll have access to it. Or just watch the live streams that we do Monday through Saturday. We do them in the Discords. We stream it out on Rumble. And yeah, and if you want to know why we stream out on Rumble, it's because here on YouTube, like my videos get no reach. Also, alpha trading videos get muted on YouTube. Why do they get muted? Well, they get muted because we're giving you very clear and correct and obvious mathematically relevant information about trading, and it's the same information that's used by the high frequency trading firms and quant trading shops and the large capital institutions that own a lot of companies, like they're the majority shareholders of companies like Google or Alphabet, which owns YouTube. And even Rumble is owned by like Peter Thiel and his regular crew of investor friends. So it's not like they're of pure heart either, right? When it comes to corporate interests, no, they're also driven by greed, but because they saw a niche, tiny as it may be, for a small number of people, who think that somehow using a corporate video website is free speech. They're like, hey, we can exploit these people who think, right? So they made that website under the, they made like Google under the, Google made YouTube under the pretense that anyone can YouTube this and that. You just have to follow certain rules and not say certain things and all these kind of, like, they have a lot of terms of agreement. And Rumble is like, yeah, no, you can use our site, you can say whatever you want, no problem, we're not going to moderate your speech, but they actually do. So I don't know which is better or worse, but at the moment we're still able to post our videos to Rumble, and people are still able to find us there fairly easily. Right? If you search for Alpha Trading VEPs on YouTube, it's much harder to. It is, you can find it, but it's much harder to find on YouTube. If you search for Alpha Trading or Alpha Trading VEPs on Rumble, you'll find it pretty quickly. Usually at the top, but even if not at the top, you'll at least see it on the first page. Alpha Trading VEPs, VEPS, right? Or just Alpha Trading. And usually we see ourselves, like even on the front page of Rumble, on the crypto section, on the finance section, right? Or trade, I think it's trading or finance. I think it's finance. So they put us, there on their site. They're not hiding us, apparently. Well, the ridiculously low number of views, considering the content being put out, is, maybe we just suck at making videos. It's also a thing, entirely possible. But the way, anyway, I don't know. I'm going off on a rant about this. I really don't mean to be. This video is to remind you about the RMLRs and about the mean reversions and why it's important when you're trading to keep an eye on the moving targets, because currently the RMLR target for the 4-hour time frame of Bitcoin, the 3012 RMLR target is around 100K. Okay, but that doesn't mean that it's going to necessarily stay at that 100K. It keeps shifting candle by candle, right? It moves a little bit here, a little bit there, right? That's why we always say the RMLR is not the future RMLR lines are not price targets. They are directional targets, right? It tells you if the future RMLR is going up or down, and it is highly accurate in that respect. Now, it just so happens to be that the price targets are usually pretty accurate too, but they don't have to be. They can be wildly off, okay? Like you can have a major repaint, and it happens all the time. It happens, frequently enough that we do not use the RMLR, the future RMLR, as price targets. Now, the current RMLR is what it is. So let's say the current RMLR is 100K, and you see Bitcoin running up towards 100K. That's going to be the target, right? If it's making that move, right? But as candle by candle, right? The line prints, it'll print in a slightly different area than where it was showing, but the direction will be usually the same, okay? Unless you have a significant change, in which case you'll see that the correlation of the direction is negatively correlated, maybe even significantly negatively correlated, okay? And you see that in the indicator. It shows it to you if you want to see that, right? But whether you turn on that correlation or not, you can see where the target is. Let's say you look at the next candle, and when the next candle happens, you see where it actually prints. Did it print in the same direction? Like if it was pointing up, is it still pointing up? If it was pointing down, is it still pointing down? If it was pointing sideways, is it still pointing sideways? Which direction is it when it actually prints? You'll see. Usually, it's the same direction. And why is that important? It's important because it lets you keep your targets calibrated. Right? You don't just want to look on a target and think, that's not going to move between now and the time I hit it. No, targets move. This is a dynamic market. Targets move all the time because maths, right? So every trade affects the market. So targets move. So you should keep that in mind as you look forward to trading the markets, right? As you look forward to trying to scalp and take profits. So ultimately, that's what you're trying to do, right? If you're low time frame traders. If you're not a low time frame trader, if you're more like an investor, frankly, you don't need to worry about any of this. You can, but you don't have to. You can look at long-term probabilities and figure it out. But if you're just a long-term investor and you're not just doing a one-time big buy because you have let's say you have hundreds of millions of dollars or billions of dollars of wealth, and you decide I'm just going to buy a whole big stack of Bitcoin, what you can do, right? In some cases, if you have a huge pile of money to invest, a lump sum investment can make more sense than DCA, but it really depends on your particular, context, and you should really talk to your financial advisor about that. For most people, though, even wealthy people, but for most, it depends on the person. But for most people, DCA is the way. It just really is. That's, statistics demonstrate that's the thing to do. If you can invest money, the way to do it is to DCA. If you're investing, over a long period of time. I'm not talking about if you're investing in your startup or something like that. No, if you're investing in the markets, right? If you're putting money into the markets, DCA is the way. It's really simple. On a regular calendar basis, doesn't matter if you do it daily, weekly, monthly, quarterly, yearly, doesn't matter. Whatever your DCA schedule is, you follow that. That's going to be the way to do it. Almost like clockwork, right? And there's different strategies in terms of how you do it and what the timing of it should be, what your period should be. Should you wait until the summer when prices might tend to be lower, or should you wait for all these different strategies. The simplest thing to do is every week or every month, or whatever your schedule permits. In some people's cases, it's every day. Whatever your schedule permits, DCA is the way. If you have a $50 purchase, if you spend $50 every time, you spend $50 every time. You don't go to 51, you don't go to 49, you don't suddenly spend $100 one day or 20 the next. There are times when you can make exceptions. Okay, there are times when you can make exceptions, but understand that every time you make an exception, you're breaking your DCA rule, and you're not DCAing at that point. Okay, but there are times when, if you see a massive opportunity, price dumped out, 30%, 40%, and you see it's very clearly going to go back right to the upside, and you just got a huge 30-40% savings Okay, so you might want to buy DCA a little bit extra if you can afford it, right? On that particular instance, because you got a 30% extra savings. Great, maybe you get 30% extra, right? But the point is, DCA is the way, right, for investing. If you want to have no headache, just stress-free kind of long-term investing, and generally trust that the markets will do what they do, which is they tend to drift up over a long period of time. Why? Because the purchasing power of the dollar tends to drop because they keep printing more dollars. Right? Even when they talk about quantitative tightening and quantitative easing, in all of those instances, they're still printing more dollars. There isn't a case of quantitative easing or quantitative tightening where they're actually not printing more dollars. Like in all of those cases, they're still printing more dollars. In every one of those cases, right, they're still printing more dollars. So I highly recommend that you DCA if you're looking to invest. It's not financial advice, but it's definitely not financial advice in the sense of like every professional financial analyst that tells you how to invest, like the ones that are certified to tell you, they all tell you that the safest way to do the general strategy is to DCA. Now, what to invest in is different. Some might tell you bonds or treasuries or commodities or some mixture. Diversify your portfolio. No, focus your portfolio. They all have different things to say, but they will generally tell you that the way to spend the money with the least headache over time is to DCA. So that's it. And if you guys want to learn how to actually trade the VAPs on low time frames, tune into Alpha Trading's live streams Monday through Saturday. They start at 11 a.m. U.S. Eastern Time. Go to alphatradinghq.com/Discord to get free indicators, free chart, and to join the live stream and to learn all about how to trade the VAPs for free. That's it for now. Take care. Happy trading. Peace.